There is no way you enjoy being stressed out whilst you're on the charts. What if I was to tell you there is a simple, effective way that's helped me over the past 17 years? Never stress about opportunities. Never jump into the market just for the sake of it or worry about what's going on. Even trading multiple pairs. Now, I know some of you are under the impression that if I have more pairs on watch, that somehow translates to more stress. The reality is, I've met all kinds. Traders that have lots of pairs, sometimes people that overdo it, sometimes they're changing their watch list halfway through, sometimes they specialize in just one asset class, but they're always stressed. And I'm going to teach you in this episode how much more relaxed, simple things that you can do. Look guys, this is why I'm never stressed whilst I'm trading and haven't been for many years. It's really simple. I'm live on Aussie Kiwi Short. This is my watch list. I'm just going through a bit of an update right now. The reason why I'm not stressed, FOMOing, revenge trading, jumping into the market is number one, I've got this in check. So I've done the work on my mindset and I'm really in tune with my emotions. So I don't make stupid decisions. But more importantly, my detail is key. So I know what I'm looking at, my entries, my exit. I know what I'm not looking at. So I know when to just walk away from the charts. And most of the problems that you guys have is that you just can't help yourself. You don't know when to walk away from the charts and you force positions. So I'm just going to give you a quick rundown as if you were sitting in the office with me. What would I do? How long would I take going through it? I'm going to show you my thought process, how I deal with this, and how you can just take away little gems into your own trading. So I'll start with top down, but we'll go with Aussie Kiwi first. So Aussie Kiwi will give you an insight as to why I've been looking at this in the first place. So you see this weekly, beautiful weekly formation there, looking for this as a sell-off. So this has a higher time frame narrative to it. Daily, nice little retracement. Then we go to the 4 hour. This was the idea behind the trade. Is this the best trade in the world? No. Does it have a little bit of high risk to it? Yes. Well, I'd say higher in risk, but you got full volume there. So let me show you. So full volume on price here, beautiful stuff. Then you've got your volume here, so naturally we're looking for price to interact with that area, which we do. Generally speaking, which would make this a much better structure, would be a second base. We don't get that, but we know the value is still here. This is where the volume is going to be. What I like about this one is that we tapped the volume, then we waited for the 4 hour retracement. This was lovely. So at this point we've got the 4 hour retracement, and then you've got the 1 hour rejections, which is, this is where the volume is, as you can see on a lower time frame now. So here's the volume, we tap it, we reject. First candle, not the greatest. Second one, just indecisive, waiting for a little bit of a dropout. What you tend to find is that price will fill the wick, so you're going to get your answer either way. So I wanted to see is if we fill the wick this way or we fill the wick this way. Now, what do we get? The path of release resistance was a sell in the first place. That was the overall selling idea from our watch list that I put out to the community in the first place. So then we filled that area, then we start to build our lower time frames, which is this. So this is nice and simple. The thing is with Aussie Kiwi, even with like a 10 to 12 pip stop, it's going to seem massive. It's all relative to the actual structure itself. Now I was looking for a much tighter entry, which was above this area here. So just anything with price interacting with this, didn't get there, followed through. Then I got involved in the market as a secondary entry. So my first entry would have been up here. This is like my insurance to that if it doesn't play out, which is great. So currently running, I think about 1% at the moment. Target area is the bottom of this structure as a minimum of over 3 to 1. And I'm actually looking to see if I can ride this further. The only thing I don't like, and again, this is why I'm relaxed with it, because I'm at break even now. I can let it do its thing and just let this ride out. The thing that I don't like about structures like this is, if you're going to go on a long bearish run, and I guess this could be the lesson, again, giving you the live thought process, a strong bearish run is going to start off with smaller stacks of price. So you're not going to see larger volume like this as a general observation. It doesn't mean that this can't commit to the higher time frame. Just generally speaking, what you'll get is that, let's say this is a daily area, like whether you've got a zone here, resistance, doesn't matter. Let's say it's significant. If you are going to get a significant move, and you can test this across all pairs, all instruments, all time frames, but if you are at a major area of selling or buying, how it starts is crucial. So you could go and test and find that, right, if I'm going to sell something in a significant sell-off, what would it start off with? Would it have large volume like this, where you get 2 or 3 days or whatever of selling pressure, where it's very direct? And then would you get a large structure like that? Would you get that? Probably not, if it was going to go and carry on to be a very bearish run. What you could do is that you could fib it and let me show you this. So you could fib this and go, right, where do we stand? More than 50%, so it's borderline at this point. Anything bigger than that, then you definitely want to be dealing with it. However, we didn't create a second base, so this is kind of an uncommon structure. What I would usually be looking for is this sell-off, smaller consolidations before you start to get the larger ones like this. This would be so much further on. I would already see maybe 1, 2, 3, 4, 5. This would be like the 6th stack, if you like. But what we've got is a larger piece of volume almost on the first run, as in you get your full volume and then you get your bigger structure. So that's kind of uncommon straight away. Does it mean we can't trade it? No. Does it carry more risk? Absolutely yes. Does it make me stressed trading it? No, because I've already covered those variables. So I already know inherently when I'm entering this position, does it fall in the higher in risk category? Yes. So what does that help me with? It helps me identify what would be a good loss, what would be a bad loss, what would be a good win, and what would be a bad win. Most of you guys don't know that with your strategy. Even when you just trade one pair, you got no idea whether it's a good loss, bad loss. You just see everything as a loss and a win, and that's why you're losing. You've got no way to quantify or qualify whether these trades are good or not. So what happens with this trade? I actually don't care if it hits target, if it doesn't. What I will do is that if price moves towards this low and we're hitting around 3 to 1, if it then came close to swaps, would I want to then close that position? Yes. Why? Because we're potentially retesting the back end of this. This can be one bigger structure to move back up to the high again. Why would I think that in the first place? Well, I'd think that in the first place because of my original thesis of what I showed you with the stacking and price and how this is uncommon. You see my point? Going back to it, why am I not stressed whilst I'm trading? Is because I know from data, how does price usually behave? And what does it look like that still is tradable but has a lot more risks attached to it that would then make me be slightly more cautious? Maybe I'm more likely to take a profit target versus holding out for a higher time frame. Why? Because it doesn't have the key ingredients that make up the majority of successful trades. That's why I'm not stressed, because I cover these variables and I'm aware of them. The problems you guys have is that when you are trading, sometimes you've got no idea what's going on. So you're trying to think, well, what's happening there? Why has it done this? Why has it done that? What happens when I do this? You're not actually thinking about A, B, C, D, E. You're not 10 steps ahead, you're 10 steps behind. And that's why you're always reacting. You're reacting from a technical point of view and you're reacting from an emotional point of view. And that's why you're not profitable. That's why you don't make it to payout. And I've just covered one thing here and I could breeze through the rest of them. So right, that's my analysis on Aussie Kiwi. I'll give you a little bit more time. I would actually be a lot quicker than this because I'm actually explaining it to you in the process. But that is how I can just go, right, I know what I need to do. I can get on with the rest of my day. You know, lock in the profit if I need to. In this scenario, there's no point locking in anything just yet. And then I'm going to have a scan through. Right, DXY selling off, to be expected. Euro dollar to move higher, to be expected. Because I'm looking for euro dollar to tap into this volume here and eventually move towards this 1.23. It does look like for the foreseeable that the DXY is looking more and more bearish. Helpful for me because now we're fully in this run and we've broken through all of this mess here. What can I look at for the rest of the week? Any continuation here, I'm all in for the long, which means dollar cross pairs makes it nice and simple for me. So if I go 1 hour, broken through that, potential reduced risk entry in this, I was fine missing this one out, because again, if we're going to lower time frames, why am I not stressed about missing that position? Because it was not a typical way that I would take it. It was a much riskier way, in the sense of it doesn't usually look like that, because what you've got here is the sell. You've got a failure of this structure. This is way too large as well. It wouldn't be typical for a sell here. We come up, we come down. Like, everything about that is erratic. The only good side about this one was we did eventually establish a base, as you can see here, base of price, and then we had a clear gap. I actually covered this, I believe, in the last Falcon episode. These gaps being filled, right? Gaps filled, moving towards a higher time frame. I mean, you could see that a mile off. Why? Because the DXY is super bearish, and if the DXY is super bearish, this is going to be bullish. So that's how you can simply do it. But now we're out of the woods, we're out of all of the mess, the wick, all of that. You now have a clear pathway for upside. So that makes it nice and easy for me. So then what do? I go, right, I want to build the watch list, looking for the rest of the day, but more so tomorrow. So I already know pound dollar is going to be in there before I even look at the price action. Why? Because if the DXY is moving down, euro dollar is moving up, pound dollar is moving up. Now go to pound dollar. Nice and simple. We're clearing all of the mess. So let's go back to the daily, see what that's looking like. So you've got your daily bias here. So I'm incorporating a combination of the higher time frame with the lower time frame. And it doesn't take me long. That's why it's relaxed. If anything, having more gives me more flexibility. You guys know what it's like when you've got rubbish price action and you're just staring at one instrument, trying to force it. That's why you lose. That's why you don't make it a payout. So again, another example of being able to be relaxed with it. I can go, right, Aussie Kiwi, we'll manage that how we manage that. We know the plan. Euro dollar. So by the time that's ready, that's going to be tomorrow London session. Pound dollar, by the time that's going to be ready, that's tomorrow London session. And some people might ask me, Mark, is that more stressful? Because now you have to look at other pairs. What if they all shape up at the same time? What if they don't? What if one of them shaped up and one of them didn't, and I didn't have them both on watch? Like, there's always pros and cons to everything. But what I can do is it gives me flexibility to look at what's going to give the better entry. I know the bias is to the upside. So now I don't need to question, what is the bias? I can just look at, well, we've broken out of this high, so therefore I can now look for my entry criteria with my strategy to be entering here in London session. This is a trade that I'm looking for within there. I won't go into all the details, but you get the idea. This is what I'm looking for, this whole bearish sentiment to fail, which it looks like the market is showing us a sign of that failure. So if we hold above here, I'm looking long. Where would I look for a short? I would not look for a short until this low would be invalidated, because that would show me the buy idea. Look, you're wrong about this. The market isn't moving to the upside. We are moving lower, but all the while we are trading above here. This is fair game for still longs. So until that gets breached, if you like, that's when you can say sellers are in control, and that would be very aggressive right into the lows, which I'd be happy to capitalize on that. That's again another reason why I'm never stress trading. I don't have this ego where I'm like, yep, 100% going higher, 100% going lower. No, I don't need to sit on that ego, because number one, I don't know, because no one does, and number two, I don't care, and number three, going back to trading in the zone, do you need to know what happens next to make money? No, you don't. So again, going back to these key principles that you learn in the earlier years, absolutely crucial. So for me, I can keep this really relaxed. That's why it's not really stressful for me at all. I can wait, and guess what? If it doesn't shape up and it just carries on trickling and doesn't give an entry, I also don't care, because I always know it's just going to be another trade around the corner, and I'd rather keep my mental capital and my physical capital versus just jumping into the trades and acting like the herd. Always remember what the herd do. The herd are always wrong. The herd are emotional. The herd force things. The herd just trade for the sake of it and out of boredom. I don't want to do any of that. I want to be a sniper, not a machine gun. And I can still be a sniper with more pairs than just having two pairs, but trying to force it when I don't need to. Trading is all about knowing when to be aggressive and when to be conservative. So if you're a new trader listening to this for the first time, you can really be relaxed with this. So I'm just building the watch list, and I'm taking 7 to 8 times longer than what I would do. I'd be done in 3 minutes from now. I'll be going and making a coffee. Bit late for a coffee, but it's worth it. So DXY bearish. Right, now we go to pound yen. So pound yen, take a look at the bigger picture, looking for some sells at the path of least resistance here. So this is how I would keep it. So I'm aware of these areas, looking for price to interact with that. Look at that 4 hour there, 37 minutes left. So if we close like that, high chance we're coming back up to the high. We didn't quite make it after that gap. As you can see, unfulfilled price. If I just put that on there, the gap hasn't been filled, and the gap between this piece of price action and here also hasn't been filled. So everything about that is bullish, right? You can see all these lows been taken out, that low been taken out. You know what you could do? You could play at recovery. So what I would look at tomorrow, if this was London session, I would wait for a follow through overnight, continuation, and then this would now be my variation. So I'd pull that into my watch list and go, right, it's not my main target, but I'll put it as a yellow. So this will be, let's say euro dollar, pound dollar, nothing shapes up. Now I'm going pound yen. I can look for that recovery play for these technical reasons. And if it carries on going all the way to the high, great. If it's a short-term 3-4% trade, also happy to work with that. Then I'll go through again. Pound Aussie, nowhere near really. A lot of erratic price action. I can move that one. Yeah, I'm not interested in that. So again, that's all it takes for me. About literally 3 seconds. Pound CAD. Yeah, nothing. If We retested that. No, we haven't. So if you notice how this low, usually if you're going to get the next significant move, it will retest the back end of a previous lot of volume, which you can see that's here. Look at the gap between this. So now what I can look at is either a second base here, move back up. I don't want to play that counter. I'd rather play the recovery of pound yen. Rejections here. I will be looking for sells there, but that's an easy one for me. Leave that. Like there's like a market purple as like a potential to just be aware of. But listen, it takes me 4 seconds to look at it. I'll move on. It's not going to be in my daily watch list. Then I go Aussie dollar. Was looking for sells this week. Never got them. Now we're moving to the upside. Let me just clear this all off. So what I will be looking at now is that this is kind of already started to commit to this move and phase 1, phase 2, phase 3. We're likely by the end of the week going to see Aussie dollar up here, and one of the main reasons for that would be the DXY going on that bearish run. So what we can look at is another little tip is this: by the time that, if this is the move we think it is, and we go from here to here, so we hit that low, you'll find Aussie dollar would have moved sideways and committed to that. So I will be looking for longs, Aussie dollar, Kiwi dollar, also looking for longs to move to that piece of volume. Again, I'll just put them on as like purple for now, just to be aware of. And last but not least is Euro Kiwi. So we can look for some potential shorts here on Euro Kiwi. 4 hour. Yeah, nothing yet. 1 hour. We're just building. Yeah, we could potentially look for a short. This will be more of a tonight because it can go over tonight. So I can already see what I'm looking for. Yeah, lovely stuff. So what I would look for now is I would wait for price to fulfill this as a little phase 1, phase 2, wait for some rejections, what I call an insurance place as an entry setup. I would definitely look for that, because by the time the daily is finished, we might finish bearish. We'll see. By the time the daily is actually finished, if we finish on a high test, the thing is, it's not really rejecting anything. It's rejecting nothing, but you can still play the pullback. It's just not going to be the biggest move that you think it is. So this would be more of like an in and out as we still keep climbing towards 1.9. So we'll see. Some trades can surprise you. So I'll move these out the way, and I'll kind of put this as, this is my secondary list if you like, but the reality is this is the trade that I'm in, so I'll manage that accordingly. The main trades I'm actually looking at is a long on euro dollar, a long on pound dollar, and then a potential recovery play as a higher end risk play on pound yen. And these are the kind of potentials maybe by the end of the week. Pound CAD or Aussie dollar gives me a bit of variation, and so does Kiwi dollar, because it's basically, I'm looking to get long against the dollar. That's all that really is. And that is really how simple you can keep these things. But listen guys, that's why I'm never stressed whilst I'm trading. Relax with it. And if none of these shape up, and this is the real key that I want to get across, if none of these things shape up, I spend zero time thinking about it. I brush it off, I go again, because I know this thought process, the systems that I follow, my weekly ASR to assess missed trades, good losses, bad losses, good wins, bad wins, like that system that I follow and the system that I teach people is what keeps people relaxed from a technical point of view and a psychological point of view. That's something you can follow for years, and I've been following for nearly 20 years. That's crazy to even say that. I'll be coming up to 18 years trading. I didn't get here by stressing my way or being anxious on the charts. I got here because I don't carry the emotion from one trade to another. I don't take things personally. If my analysis doesn't work out for that week, I've got no business trying to be right or being wrong. I'm playing probabilities, and having a probabilistic mindset is not easy, as you guys know. Like, thinking in probabilities is so tricky. You only get that with experience, but the right type of experience, and that's what I wanted to get across. So yeah, nice and relaxed. Going to see how these trades play out, and we're in for a big July and an even bigger August. Another little myth right at the end: don't trade in August. Absolutely rubbish. I've been trading for 17 and a half years now, and I've always traded in August, and it's always been fine.